Hello, welcome to this series of interviews with cybersecurity experts. I'm Eva Tasheva, co-founder and cybersecurity lead at Cyen. But most importantly, today we have a guest with us for the first time, the European Agency for Cybersecurity, ENISA, speaking on our channel. And we are very, very happy to have Thanos Drougkas joining us. Hello and welcome, Thanos.
Thank you very much for having me, Eva. I appreciate the invitation.
With Athanasios, we will discuss the NIS, a Network Information System Directive Investment Report for 2023. The report was published in November last year, and it looked how the directive was implemented across the essential and critical sectors. Thanos, what is the report objective, and did you meet it?
So, as part of ENISA's mandate, we are tasked with providing, upon request, support to policymakers at EU and national level to support them in further developing the EU cybersecurity policy framework. In this context, one of the main services that we provide is that we collect evidence to allow policymakers to assess to what extent particular policies have met their objectives and to what extent they have been effective in increasing the cybersecurity maturity of the entities in scope. The main way that we provide this service is through this NIS Investment Report, which essentially consists of a large-scale survey where we survey more than 1,000 operators in scope of the NIS directive, and we collect data around things like their cybersecurity budgets, their operational capabilities, their overall cybersecurity maturity, and we try to assess how the NIS directive has influenced both their cybersecurity spending as well as their overall cybersecurity capabilities. So, in short, what this report does is it provides a summary of the main data points from what we believe is a representative enough sample of operators in scope of the NIS directive. This is more or less the context and background of this particular report. This is something that we started doing back in 2020. So this year's publication marks the fourth iteration of this particular work.
Great. And what are the trends? So if you have done this report for 4 years already, you know, you could have spotted probably some trends in investment in information security in Europe.
Certainly. So first of all, we monitor some main metrics that allow us to assess whether or not overall cybersecurity spending is increasing. The main metric that we use in that regard is the ratio between cybersecurity spending and IT budget. So essentially, what percentage of IT spending goes into cybersecurity. Monitoring this metric with any shortcomings that this may have allows us to at least have, let's say, a broad understanding of whether or not cybersecurity investments are increasing or not. And the first conclusion that we've come up with over the past 3-4 years that we've been doing this work is that this ratio is increasing. So compared to last year, this year's report indicates an approximately 6 to 7% increase in this ratio, which means that cybersecurity spending as a whole for the operators in scope of the NIS directive is in an upwards trajectory. This is also backed up by data that we collect through other means, so through other sources other than the survey that we conduct ourselves. So through market surveys, research from private sector companies and so on, which also indicate similar trends in increasing in cybersecurity spending. Now, going into the specifics, what we have found the past couple of years is that cybersecurity spending tops the priorities list when it comes to projected future spending. So in addition to the documented increase in cybersecurity budgets, we also see that CIOs and CISOs actually prioritize cybersecurity in future investments, along with some other key technologies that are becoming more and more adopted, including cloud, artificial intelligence, business intelligence, and so on. What we're also noticing is a gradual shift from traditional cybersecurity investments in hardware and software more into human resources and outsourcing to cybersecurity support services. So we see an increasing trend of organizations outsourcing part of their cybersecurity operations to managed security service providers and the like. Specifically concerning the products and services that are the main where we see the majority of new money, new cybersecurity investments going. These concern mainly cloud security. So, for instance, cloud security access brokers and application security. Now, with that said, obviously, the more capital expenditure intensive components like network security, endpoint security, and so on are obviously still there and make up for a big part of the overall cybersecurity spending. And last but not least, when we look at the influence of the NIS directive, what we have noticed over the past few years is that it has actually been quite influential in increasing cybersecurity investments for the operators that need to comply with the NIS directive. And quite interestingly, it has mainly driven investments in areas that were not necessarily the focus in the past, but are now more front and center with the need to comply with the NIS directive. I can give you some examples like network intrusion detection and prevention, security incident and event management. So these relate to the obligation to report, to identify and report incidents to the national authorities, but also areas such as security awareness and training for the organization staff and risk assessment. So these were areas where traditionally operators in the critical sectors did not necessarily prioritize in terms of new investments, but through the need to comply with the NIS directive, they're becoming more and more, so to speak, active buyers in these particular domains.
So also around 7%, this is good. Could be a KPI measurable indication of how much companies should or could realistically expect to invest in cybersecurity. What you mentioned, I'm very happy to hear, because this is not compliance cost. So we don't spend this money just to comply, to show compliance. We invest this money to improve our cybersecurity, our cyber resilience, and also awareness and training. Obviously, risk management are elements that are the fundamentals of creating and managing cybersecurity. So I'm glad to hear that this is where the money are going, in more sustainable investment rather than just ways to prove that the minimum necessary is done. Okay, this is very good. And what does it say for Europe? How do we compare to the rest of the world?
So this is where it becomes a bit interesting. Now, obviously, the data that we collect through our own survey only concern EU operators that need to comply with the NIS directive. However, when we look into research conducted by private companies and market survey companies, what we see is that when we compare this metric that I mentioned earlier, so the ratio between cybersecurity spending and IT spending, when we compare it across regions, so for instance, when we compare European Union operators with North America operators or APAC operators, what we see is that investments are actually quite lower in the EU segment. Now, this is more or less a fairly consistent find if you look at similar industry research and market surveys. However, when we take a step back and compare this value for EU operators with our own data points that only concern operators that need to comply with the NIS directive, we actually see that operators in scope of the NIS directive outperform this particular metric. So this leads us to two main conclusions. First of all, cybersecurity spending in Europe overall, if we look across industries, is generally lower compared to North America, for instance, or APAC. However, the operators that actually have compliance obligations with the NIS directive outperform both the overall EU average spending as well as this cross-regional benchmark, so to speak.
This I might comment that it is perfectly aligned with actually my thesis for my master in cybersecurity, where I looked at the cybersecurity risk appetite of the European institutions. So when it's critical sector, when it's, let's say, critical sector for the economy or government, we typically tend to have less appetite for risk, and obviously this means investing more in cybersecurity. We do at Cyen work intensively to also democratize the access to cybersecurity, to allow also these other companies that are startups or that are SMEs that would like to innovate, that would like to remain sustainable, also to see the value of cybersecurity for their sustainability. But okay, critical sectors overall better investing in cybersecurity, or at least investing more compared to the other critical sectors across the world. But we know that the level could sometimes be dramatically low. We have seen significant issues both in North America, but also in Europe when it comes to critical infrastructure, simple security measures allowing for massive cybersecurity incident. Are we today investing enough in the critical sector to enable cyber resilience?
So this is actually a more complex question than it seems. So let's break it down to the main components here. So first of all, what does it mean? Are we investing enough in cybersecurity? So who is we? Is everyone spending the same in the EU? The answer would be no. So we see a lot of discrepancies in cybersecurity spending when we compare operators within the same industry, within the same sector, but also when we compare across different sectors of the NIS directive. So we see that the level of cybersecurity spending tends to fluctuate a lot, and we see significant discrepancies when we compare the I would say the more mature, or the sectors that we perceive to be more mature, with those that are now just getting started in building up their cyber resilience. So the first part is not everyone is spending the same. And this is something that needs to be addressed. We need a bit more harmonization in determining baselines for cybersecurity spending. The second part brings me back to the point that you raised about cyber risk appetite that you just mentioned. So obviously, at the end of the day, cybersecurity spending is conditional on an organization's cyber risk appetite. This is something that is let's say, influenced by certain dynamic and volatile factors, such as the threat landscape. So the threat landscape changes constantly. So does the cost of incidents, of major cybersecurity incidents. So even saying that a particular threshold to be met in cybersecurity spending, that this would be sufficient, this is also something that is not necessarily carved in stone. So this is something that can change as the threat landscape changes. To give you an example, so we've seen that the direct costs of major cybersecurity incidents have increased by 25% compared to last year. At the same time, cybersecurity investments have increased by, as we mentioned, around 6 to 7, 8, 9%. Obviously, it seems that the cost of incidents is increasing at a much higher pace than cybersecurity investments. So what does that tell us? But going back to my previous point, what we see is a general positive influence of the cybersecurity policy framework in the EU. We've seen the NIS directive driving up investments, and we notice that on aggregate, the cybersecurity spending for operators in the critical sectors is, compared to other regions, is at a good stage. Now, is this enough? Maybe, maybe not. There's certainly room for improvement. What we can also say for sure is that this increase of 6 to 7% that we notice on a year-by-year basis, it certainly indicates that more attention is being paid to cybersecurity, and therefore more money is invested in this direction. However, this increase does not necessarily indicate a race to the top. So it's not as if critical sectors suddenly perceive cybersecurity as a sort of competitive advantage, which means that, okay, now this is an investment opportunity for us to unlock let's say, future possibilities in our industry. So I would say what we're doing well in the EU currently is that we have established through the regulatory framework a very good baseline. And I think to a large extent, this is achieved by operators in the EU with, again, room for improvement. But we're not seeing necessarily an investment surge to really reap the benefits of cybersecurity, especially with the introduction of new technologies.
Yes, I see. But maybe a pressing question that everyone, my citizen or expert alike, ask: are there any significant gaps? Is there areas where we should really invest more because they're high risk, as you said, but maybe they're high impact in case of incident?
So indeed, what we've seen through the data that we've collected over the years is that there are certainly some areas that are clearly ripe for improvement. And I would start with the overall vulnerability management and the patching practices. So it is clear that the majority of incidents, and this is something that came out from our report as well, that the majority of cybersecurity incidents, especially in the critical sectors, originate from vulnerabilities in software and hardware components. Yet, this year's findings indicate that only 28% of surveyed organizations fix critical vulnerabilities on critical assets in 1 week. So we're talking about critical vulnerabilities with the potential of massive disruptions in the operations of these sectors, and at best it takes 1 week to resolve them, and only 1 out of 4 organizations is able to meet this deadline. In some cases, applying patches to critical vulnerabilities may take more than a month or even up to 6 months. So clearly, this is an area for improvement. Now, again, I would say this does not necessarily fall on the operators themselves necessarily. So in some cases, it is the absence of a solution, of a security patch, that prolongs this patching period. However, it is clear that also organizations themselves may not necessarily have the adequate resources, capabilities, processes in place to timely apply patches in critical vulnerabilities. Another area where we see, in a way, a lot of room for improvement has to do with cybersecurity supply chain risk management. So in the survey that we did, we actually found that the vast majority of EU operators have third-party risk management policies in place that also cover cyber risks. So we're talking about more than 80% of the surveyed organizations actually do have some sort of internal policies in place. However, less than 50% of them have dedicated budget to follow up on these particular policies, and only 1 in 4 has someone specifically responsible for implementing and following up of these particular policies. So what we have here is the existence of, let's say, a general framework within the organizations to manage supply chain risk. However, this is not systematically followed up. And part of it is because not enough money goes in this direction to support any necessary actions like auditing a supplier or having someone responsible for overseeing this entire process. Finally, another area where we see a lot of gaps, and this was an area of focus this year, has to do with cybersecurity skills. As you probably know, the European Commission focused a lot on skills last year. It published a communication with policy actions directly intended to address these particular issues. And what we saw was that around 83% of surveyed organizations have recruitment difficulties in at least one information security domain. This can be cybersecurity operations, it can be security architecture, it can be governance and risk management, and even more so, 32% of SMEs are having difficulties hiring in any security domain. And this also, to some extent, goes back to budget in a way, because these companies either do not have sufficient budget to implement proper recruiting procedures, or perhaps they are priced out of candidates for these positions because the supply of talent in these areas is actually much smaller than the demand itself.
Confirming what you say, because what we have done in our channel in the last year is probably cover all these topics, you would find a video with our colleague Krasimir, the vulnerability management, how to handle it and what to do also in terms of pen testing to make sure you are aware of your vulnerabilities. We did discuss vulnerabilities in the software supply chain with Volkmar a lot, but we also touch upon skills, upskilling, reskilling with Rosanna Correr, and also with my colleagues from ENISA ad hoc working group on enterprise security. We actually held the panel on the topic of skills, how you could come from any field and use your knowledge or experience to contribute to cybersecurity. Check it out on our YouTube channel. So in that sense, probably what you found is not that surprising to me, maybe not that surprising also to the audience, but were there any surprises in your finding, something you didn't expect to see?
So to be honest, when we started doing this work 4 years ago, we didn't really know what to expect. So it was, let's say, our assumptions about what was happening within these organizations was based on intuition more than data, which is also the rationale behind having this sort of work. So I would say we were not expecting something specific. However, over the years, we have found a lot of quite interesting data points, and I can share some examples. So, for instance, in this year's report, what we tried to do was to assess the impact of leadership involvement and accountability in the overall cybersecurity maturity of organizations. Now, intuitively, you might say, sure, if the top management is involved, this is certainly correlated with more money spent on cybersecurity, better processes, better control of the whole thing. But the findings were actually quite surprising concerning the extent to which leadership involvement actually plays a role in organizational maturity. So what we found was that for organizations that provide cybersecurity awareness training to their top management, or have their top management sign off on cybersecurity controls, the level of maturity for instant detection and response or cyber risk management is double compared to the ones that do not involve their top management in such cases, which is a very big difference. Another interesting find from this year's report concerns information sharing activities. So we asked questions around to what extent operators participate in any type of information sharing activity, be it an EU level ISAC, a national ISAC, an industry association, informal peer information sharing in their network, anything of that nature. And what we found that we did not expect was that in sectors where there is an established EU-level ISAC, participation in any type of information sharing activities is actually much higher compared to the sectors where no EU-level ISAC is present. Now, this is not necessarily a causality analysis, because in some cases maybe the sector is mature enough that it makes the creation of an EU-level ISAC easier. But this also supports what we see in practice, which is that the more information sharing activities you have, even at an EU level, the more this can trickle down to a national level as well. So this is also something that we noted that was a pleasant surprise. Another thing that was quite interesting was that the NIS directive, even though there is other sectorial legislation that also implicitly or explicitly introduces cybersecurity requirements, the NIS directive has been the biggest regulatory driver, even bigger than the need to comply with standards, to obtain certifications and everything. So the NIS directive is cited as the main driver for cybersecurity investments. I think with the only exception being the aviation sector, where sectorial rules are already very, very tight. So operators in the aviation sector cited more their sectorial regulatory framework as a driver for investments. And a couple of other, let's say, interesting findings from previous years was, first of all, last year we investigated the correlation between SOC capabilities, Security Operations Center capabilities, and investments in cyber threat intelligence. And the very interesting find was that operators that have fully in-house SOC capabilities, invest 71, I think, in any case, more than 70% more in cyber threat intelligence compared to operators that have a hybrid approach, so partly in-house, partly outsourced, which was quite striking because obviously CTI has a lot of value in an operational context, but CTI is also very useful when it comes to conducting a risk assessment at an organization level. So obviously, having access to this sort of information is useful regardless of the existence of SOC capabilities or not. So this was something that was quite interesting. And another very, very interesting find was that a couple of years ago, we tried to look into what factors influence an organization's self-perception about cybersecurity maturity. So we asked organizations, how do you rank yourselves compared to your peers? And then we try to correlate these answers with different data points that we collected. Things like cybersecurity spending, the existence of a chief information security officer, whether or not they invest in cyber insurance products, so everything. And what we found was that the strongest correlation came in the form of cybersecurity certifications. So organizations that actually invest in some sort of cybersecurity certification, whether for an internal process or for certifying their staff, this creates a very high self-perception about the organization's cybersecurity maturity, which goes to show the impact of certification in perception of cybersecurity maturity.
This is very interesting. Did you then compare the results of the perception with reality, the capability, maturity of those entities? Because I do a lot of controls and I know self-assessment can sometimes be misleading. Did you compare this?
Unfortunately, we do not have the means of comparing because this data we collected through short telephone surveys. So these last no longer than 20 minutes, and obviously in 20 minutes you cannot really do security assessment of an organization, especially over the phone. So we asked them to compare to the peers. We craft the questions in a way that removes bias as much as possible, but still, the replies are subject to bias.
Mm-hmm. I see. And probably one thing, if we look at the NIS framework from the detect, protect, but also respond, is an element that usually companies struggle at the lowest maturity. The first initial, at least instinct that I see in my clients is, let's put a measure, let's put something, some firewall, some patching, some security measures, but people don't often think about the assessment, what you need to protect and so on. And rarely they go to a very high maturity in the detection and response capabilities. You mentioned the SOC, you mentioned the threat intelligence. Are the sectors that you looked into mature in the incident detection and response capabilities?
So again, same as with the overall cybersecurity spending, what we see is a lack of harmonization in the overall maturity level concerning incident detection and response. So whether we compare operators within any given sector and compare, how they score vis-a-vis the sector average, or especially when we compare between different sectors, we see a lot of deviation. So there's really I would say heterogeneity in the level of cybersecurity maturity. And this is something that we also notice when comparing organizations of different sizes. So in very simple terms, the more mature the sector and the larger the organization, the better their instant response and instant detection and response capabilities are. If we move to less mature sectors and closer to the SME subset of our data set, this is where things get substantially below the average values that we come up with at an EU level. So again, it's I would say in some cases, organizations tend to score quite well, tend to self-assess quite well in instant detection and response. But in many cases, and especially as we move towards less mature parts of the spectrum, the scoring deteriorates quite rapidly.
This is a little sad from my perspective. You mentioned the SMEs, and my next question goes in this line: how do SMEs compare? But just to finalize the topic on incident response, IBM has found that there is a significant difference between the expense, so the cost of an incident, if you have a proper incident management procedure that you tested and processes in place to limit the time of the incident. So this would have a significant reduction in the cost of the incident that occurred. So it's a little bit sad for me to see that, but the SMEs are nowhere there. So they're really, really exposed. Any incident could have dramatic consequences for them. But how do they compare the SMEs to large organizations in the other capabilities or spending? What is your observation?
So first of all, in terms of the overall, let's say this key metric that we follow, this share of IT budget that goes into information security, actually SMEs score very, very well. But this has to do more with the structure of cybersecurity investments. So larger organizations tend to benefit more from economies of scale. To give you an example, you need a firewall. Now, whether you have 50 users behind it or 500 users behind it, you still need a firewall. But in the latter case, you benefit more from economies of scale. So these metrics tend to be a bit higher for SMEs. However, if we take a closer look at some of the other metrics that we monitor, the other predictors of cybersecurity maturity, we see a significant discrepancy between SMEs and large enterprises. So, for example, when we look at the rate of adoption of cyber insurance, we see that large enterprises adopt cyber insurance at an over 50% rate, whereas for SMEs it is close to 10%. This may also indicate a lack of suitable offerings of cyber insurance products for tailored for SMEs. If we look at the adoption of third-party cyber risk management policies, what we see is that large enterprises have such policies at an 85% rate, whereas for SMEs it's close to 50%. Even if we look at information sharing activities, so to what extent SMEs participate in any type of information sharing activity, not necessarily an EUISA, it can be a national ISA, it can be an industry association. We see that while 78% of large enterprises participate in some form of information sharing activity within their industry. The relevant percentage for SMEs is around 45%. So really, we see substantial discrepancies in a lot of the key indicators, and some additional, let's say, interesting findings concern how the SMEs attempt to address this skills gap that affects everyone. So while multiple options are available to large enterprises to deal with this skills gap, anything from upskilling existing staff to internal mobility to increasing the capabilities of non-IT staff and transferring functions around. So these are all options that are not necessarily available to SMEs. So what we see for SMEs specifically is a prevalence of outsourcing. So wherever it is possible, actually SMEs opt to outsource where they cannot cover a particular need through recruitment. So we see that across the board, in all metrics that we monitor, there is a substantial discrepancy between how large enterprises and SMEs score. And this is also an indicator that perhaps in some of these cases, there may be room for some sort of initiative to allow SMEs for better access to certain resources. In the past, we noticed the same thing for cyber threat intelligence. Essentially, SMEs had zero access to cyber threat intelligence services. So perhaps this is something that could be, let's say, looked more closely at.
I'm again glad you mentioned this, because this is something we do a lot at Cyen, trying to reach out to SMEs, provide them flexible solutions so they can get kind of efficient advice on what they need to work on, rather than big projects and budget for cybersecurity. Interestingly enough, also we have a ENISA working group on enterprise security, where we are a group of very enthusiastic experts from all over Europe trying to make it easier for SMEs to have access to the knowledge, to maybe also participate in these knowledge sharing activities, but also to allow them, again, to have access to affordable cybersecurity tools. One thing maybe that is changing in the regulatory landscape is that up until now we had regulations mostly targeting the big ones, right? The critical infrastructure, governments, financial sector. Now with NIS 2, the scope is much broader. So we have all kind of sectors, including manufacturing, which doesn't necessarily target the criticality. It targets the activity, and any size of company could fall under the scope. We do have DORA, Digital Operation Resilience Act, which also targets very much the third-party security suppliers of ICT services to the big one, to the financial institutions. What do you expect this to change in terms of investment in cybersecurity landscape in Europe?
So, based on our experience with the NIS directive, we can certainly quite reasonably anticipate an increase in overall cybersecurity spending in these new sectors that are introduced under NIS2 and the new operators that are now in scope of NIS2, be it in existing or new sectors. So our experience and the data that we collected through this report over the years shows that companies that had to comply with the NIS directive spent more money in cybersecurity, increased their overall cybersecurity spending, changed their organizational approach to cybersecurity by introducing new roles, which in itself is a way of let's say, funneling resources towards building cybersecurity maturity. And quite importantly, ended up investing in areas that were not necessarily a priority before. And this is because of the requirements of the NIS directive. So you would expect that most companies would have, let's say, basic layer 3 security network devices, for instance, or some sort of endpoint security application. But through the need to comply with the NIS directive, they invested more in things like instant response, logging, training and awareness for their staff, and so on. So we can reasonably expect that entities that now need to comply with NIS2 will also follow, let's say, the same cybersecurity investment path or a similar one. So we can certainly expect an increase in overall cybersecurity spending, also in areas that were not necessarily in focus before. Another important element that is introduced with NIS2 is the involvement and accountability of top management in these organizations. I mentioned earlier that we monitored two particular data points. So whether or not top management in organizations receives awareness raising and training on cyber risks, and whether or not top management signs off on the security measures. This was obviously not unintentional. So we deliberately chose these two data points because they now become obligations with NIS2. And judging by the correlation between these two data points and the overall spending and cybersecurity maturity of organizations, we can also quite confidently say that these requirements, these obligations for top management will also serve as an additional driver for cybersecurity investments and overall more attention to the security and resilience of these operators.
Makes me think of also sort of the provisions for penalties in the Digital Operation Resilience Act, which indeed doesn't target so much like GDPR would go for a value. It targets really the accountability that is with management. So management might have to be suspended. And this, of course, accountability is a big word. Very much security management circulates about who is accountable, who is responsible. Hopefully, we will have better understanding in the industry of their specific roles, and each of them would play it more responsibly. Thank you so much, Athanasios, Thanos, for being with us, for sharing the report. I'll post a link to the original report to ENISA website so everyone can read and take the data points they need. But if you have any final message or something that we should look forward or follow up on, do let us know.
First of all, Eva, thank you very much for having me. I appreciated today's discussion. I think this is a very interesting topic, not only for the policymakers that we target with these data points, but also for the operators themselves. They can have a better understanding of how their industry fares across certain key metrics that predict cybersecurity maturity. I would just like to leave you with one message. We certainly see that in the EU, regulation has set the baseline for cybersecurity, and my hope is that eventually operators will seek to go beyond the baseline and the compliance requirements and fully integrate cybersecurity as part of their overall business strategy. And this will certainly drive up both investments, but most importantly, overall cybersecurity maturity.
Thank you so much. This is our mission, to help companies do compliance made easy and focus on the risk. So let's continue working together. And everyone, please do comment. Any question, any comment, any additional information you have for us in the comment section below. We would like to continue the discussion with you and with Thanos and ENISA. Thank you.